Okay. Well, there's an ancient blessing that says, "May you live in interesting times." This is interesting times. Welcome to the, I guess the new bear market. Let's see if it lasts more than a couple of days. We'll see what happens. Right now, we're seeing a very big down open on the employment data. Interestingly enough, the employment data that Goldman Sachs obviously had their hands on because they had a private conference call yesterday before the close, or yesterday afternoon, where they said that the number was going to be 250.
Yeah.
So it just shows you, just shows you about insider information and manipulation that there are definitely people who have access, and they're the ones who have it. Unfortunately, all of us, we don't. So what you're dealing with is an interesting market. They hit the market very hard. Personally, I want the futures to stay down where they're at right now for the next 30 minutes till the market opens. I'd like to see us down anywhere from 12 to 15 handles on the futures or more. Then I'm buying it. Doesn't mean I'm holding it all day. It means I'm buying it for the fade. The fade is on any extreme move, you're taking the opposite direction. That's what you want. That's what I want to see. So I'm looking for that big gap down open. I'm looking to buy it, and I'm looking for a retracement. I'm not looking for 15 handles on the futures. I'm probably looking for 5. Right? But I'm looking to buy lots of sectors that are opening up down more than I think they should be. Does it mean that I would buy IBM down 80 cents? No. That makes no sense. Would I buy IBM down $2? Oh yeah. And that's what you're looking at. I'm looking for the big gap downs. I'm looking to pick up the big gap downs. I'm hoping that there's a big spike up into the market, and I'm looking to sell into that spike. Thereafter, after you see the market does that, look to start see it trying to make higher, trying to make new highs. When it can't make new highs or it makes lower highs, turn it around. Let's get short. Let's see if we could test those lows. So you've got 2 big trades in this kind of open, right? Buy the gap down, let it fill some gap, let it stop being able to move higher, test it, can't go, test it, can't go, turn it around, get short, see if we can break lower. If we can't break lower and we defend the bottom, we're probably going to be range bound for a while, and we'll have a slow move up, right? Or at least a slower move up till we try to retest on the upside. If not, you're going to see another leg down. It's going to take a leg down. We're going to have the exact same type of situation until we start making higher lows on the bottom. So again, a little technical today. Buy the gap, look for the resistance, short the resistance. If we don't hold that initial series of lows and we break down, look for new levels of support on the bottom. If we do hold it, look for another leg up and see if we could test the resistance one more time. And it's probably just going to be a slow range-bound move. It's a fairly large move considering that they missed the unemployment number by what, 25,000?
175 to 275 actually.
Okay, so by 100,000. And it wasn't overly unanticipated. The big down move yesterday was mostly due, that second big sell-off for sure, was mostly due to this number. So it's a really large reaction to numbers that we already know should suck. So I'm looking for those moves. I'm looking for those that quick buy, the stuff on the deep discount. I'm looking for it. I feel that there's more reward on the up than there is reward on the down on that quick move. Regularly, I would try to sandwich some things and say, oh, well, if they open banks flat, I'll short them. Not happening today, so it's not even worth my time to put those kinds of orders out. Much rather put down the buys, see if we can make that trade. Eve?